Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. In today's weekly report, we have discussed the usual topics, the recent data that have been released in the United States, personal consumption expenditures, consumer sentiment, and other things. This also currently is very important, although everything is shadowed by the recent piking in the White House, the meeting of Zelensky and Donald Trump. But additionally, we have taken a look at the results of the elections in Germany. At first glance, this is political news and have no relation to economical subjects, particularly to performance on the euro, but this is not quite so. Because the result of the elections shows that no changes in the political elites in Germany have happened. As Olaf Scholz, as a Merz, as a potential new chancellor, they are actually the followers and coming from the same globalist elites from the Biden's team, actually. And there will be no changes in the political vector in Germany. And already with the new statements that Merz has made in recent political events, you can find this. What does it mean? It means that the relationships between the European Union, Germany in particular, and the United States will become more difficult, if it's say in this way. Why? Because Donald Trump he represents the industrial elites of the United States, of real production sector, while the globalist elites, they represent the financial elites who are interested with the big cash flows. They are not actually don't care where these flows are coming from, but they just need these cash flows. And there is definitely the conflict of interest between these two big powers. Since Europe is following in the same old vector together with Great Britain, there will be really problems with the relationships. And you already see it in the recent statements and what's really going on. Actually, for us, it absolutely doesn't matter who will win and who have the really domination in this conflict. For us, the major conclusion is that performance of the European currency will be less predictable, more volatile, and with such a confrontation is always, and some uncertainty, investors always run in the safe haven. So this balance not in favor of European Union. I am not speaking even about the possible tariffs and so on. So this confrontation definitely not in favor of euro currency. So now investors, additionally to some difference and divergence in the economy between the United States and the European Union, whereas we already see different inflationary expectations, different gross domestic product growth, and other stuff, they have to price in also the political issue. And this pricing in definitely will be not in favor of the euro. That's some conclusions that we have made. So from that standpoint of view, the performance of the market on the technical side, we have to treat very carefully. Why? Because those of you who read our analysis know that we are considering right now the possible double repo pattern on the weekly chart. And if you take a look at this chart, you do not see obvious problems. So trend stands bullish, pattern is still valid, 103.25 support is not broken. Formally, the double repo has not been destroyed. Formally, it is still valid, but take a look what we have this week. Appearing of the bearish reversal week on the top of the double repo here, where the actually bulls have to control the market and trying to push it higher. This is worrying sign, and we should not ignore it, because that might be, if all the things that we said about political background starts working, it very soon might be the real reversal on a market and starting of the way to the parity. That's why this is very important. But since market right now still stands at some of the beginning of this process, we are not sure. We need to check this idea. And we will do this by looking on market performance on a daily and intraday chart. First of all, on a daily chart, we already explained why the failure of the market to complete the OP is so important and why it is very bearish. I will not repeat this again, so in last week we talked a lot about this. Now, with this downside action, potentially, if we are correct on a possible reversal, potentially it easily could turn to the butterfly and with the target right around the parity and 80 pips actually. So that's what might happen if the events that have happened recently will get the political consequences. But for next week, I think that we could stay focused just on the 103.25 area by two reasons. First is the last 618 support on the way down. It is important. Second, this is daily oversold. So together they could provide us, give us bullish stretch pattern, suggesting the pullback here. So if you have a shorts position taken last week, so that definitely the point where you need to think about the booking or at least pay additional attention to this. For a short entry, we will consider some levels, but major pullback might start only after completion of this important level. So that's what we will be busy with on the next week. On the 4 time frame chart, if we still treat this as a double top, on Friday it was worked really nice, so you can see the minor pullback to retest neckline and drop to the 103.75 area. This particularly the level that we discussed, so this target also has been done. Potentially, if it really will work as a double top, its target stands around 102.80. So testing once again that these very important lows that we have on the daily chart. But this target stands below 103.25, that's why we are not considering it right now. So this is not our primary target for now, but we will keep in mind it. In the beginning of the week on Monday, what we could do, we could consider levels, stands on the resistance side, and for us it is vital to see that euro will not break the major resistance area that we have here. Ultimately, the vital area is of course 104.63, this is 618 level. And if market will break it up, it means that our suggestion on the reversal is wrong. But at the same time, we will be happy if market will just stuck in some early levels. For instance, 104.10, 104.23, it will be just great. So market will retest the neckline and then just keep dropping. That will be just great. Or, so which is also acceptable, some barrier around 104.50, 104.40, 104.50 area. So this also level is acceptable if market will just reach this level. It's not as pleasant as retracement just here, but at least slightly above the neckline it's also possible. So depending on the market reaction, what will happen here in the way of retracement, we could make the conclusions and check our idea concerning reversal. Correspondingly, on the next week, we will be able to estimate the possible upward retracement with the more precision when it will start, because currently we do not see anything. Market just touched the support and actually stands there. So we need to see how the retracement will happen. For instance, if we will have here head and shoulders, this will be some kind of the ABCD to this level. We could estimate where it will come or something of this sort. But in general, this is the plan and strategy for next week.